Jelena, welcome to the Teach Me DeFi podcast.
Early 2020, the stablecoin market cap was around $5 billion. Fast forward 5 years, and now we're at $240 billion. It's nice to see that chart of stablecoin volume surpassing Visa volume, but I think it's just the beginning, actually.
Take us back a bit to the early days of Noble.
We're not trying to create like a general purpose layer one for people just to build random things. We said we want a very minimalistic, purpose-built protocol to simply mint, burn, route these stablecoins.
You've been around for a while in crypto. What's the thing you're least bullish on?
Least bullish on? Probably.
Hey, Sohail here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, Jelena, welcome to the Teach Me DeFi podcast.
Thank you so much for having me. Pleasure to be here.
Yeah, awesome. I'm excited. Obviously, we talk about stablecoins, what you're doing with Noble, which is exciting. I think there's some mechanics which are quite unique. But yeah, perhaps we started off like a bit more basic and timely, I guess, because I recently saw this graphic on X about stablecoins surpassing Visa in transaction volume last year. I think that has made the rounds a bit. Found that interesting. I think we chatted about this actually last week with Plume as well. Just how do you feel about that? Is that the flippening now, or is it the hiccup? What is it?
Yeah, I think it's just the beginning, honestly. I mean, if we even just take a look back through history, 5 years ago, kind of early 2020, the stablecoin market cap was around 5 billion, and most of that was Tether. About 4 billion of that was Tether, and you fast forward 5 years, and now we're at $240 billion worth of stablecoins. And I think in the next 5 years, it'll probably be closer to 1.5, maybe even $2 trillion. So yeah, I mean, it's nice to see that chart of stablecoin volume kind of surpassing Visa volume, but I think it's just the beginning, actually. So yeah.
Awesome. Okay, exciting. I didn't even know the scale of it. Now that you say it.
Well, a lot of people, I think, take this for granted, right? Like a lot of crypto moves so fast, and there's a lot of, kind of booms and busts, such that people feel, I think, like it's expected, like all of this growth is expected, but actually it totally, took a lot of hard work. It took a lot of pushing on the regulatory front, on kind of on the ground in, certain geographies and jurisdictions where stablecoins are obviously very useful to people in their everyday lives. So it's was not inevitable necessarily, but now that we see this growth, I think it's inevitable we'll continue to see compounded growth over time.
Yeah. Yeah, it is quite exciting. And I think there's a few recent things, which I'll get to later about Stripe, for example. Stripe is talking a lot about stablecoins. Just posted 2 hours ago something interesting, one of the founders. But before we get into that, what's kind of like your background? Can you give us a quick overview? I've heard that you spent some time working like in different areas like government and policy and also in the Cosmos ecosystem. So yeah, what's the story?
Yeah, absolutely. So I've been working full time in the crypto space for the past 8 years across a number of roles that all very much relate to adoption of kind of these like primitives and this like infra that a number of teams are obviously working hard to improve and scale and build out in a secure way. And so I started the project about 2 years ago. So I started Noble about 2 years ago, 2.5 at this point. And prior to my role as the kind of founder and CEO of Noble, I was I was working in the Cosmos ecosystem, as you mentioned. So I was there for a number of years across product, go to market, marketing, user research, even some design. And that was very important because it really kind of taught me what these kind of primitives, what these protocols like enable, like in a fundamental way. And so that was very much like on the low levels of the stack, doing things like go to market for IBC, which is the inner blockchain communication protocol that, of course, Cosmos is known for. You can think of it as a kind of an HTTP like system. It enables blockchains to permissionlessly communicate with each other. So across a number of different areas. Before Cosmos, I was actually the first community manager at Definity, the internet computer. For those that remember, this was back in 2017, 2018 days. They were very well known for kind of solving a lot of the kind of problems that Ethereum kind of mainnet was facing from a kind of scalability perspective. So yeah, always working with like highly technical R&D driven teams. But now that I've founded Noble, my real intention is to bring these technologies to the user in a powerful way. So how do you actually build meaningful applications that improve people's lives? How do you actually bring the crypto applications that have the most product market fit, like stablecoins, to the masses? So that's a little bit about kind of my background.
Awesome. Yeah, that's really interesting. Take us back a bit to the early days then, because like the early days of Noble, I guess, because what motivated you to start that project? What gap was there in the market? I heard that it was after the Terra Luna collapse, which is also interesting. That was a stablecoin, right? An algorithmic stablecoin, I believe. So how did this kind of shape your vision of Noble?
Amazing. Yeah, it's absolutely correct that the initial kind of the moment and the impetus for starting Noble was shortly after the kind of Terra Luna collapse. So, for those that don't know, Terra actually was a Cosmos project. They were very much leveraging the Cosmos stack in a powerful way, whether that was Tendermint for consensus, or eventually they, of course, had IBC enabled. And so, in fact, UST as the stablecoin was a huge, huge part of the kind of Cosmos economy. Let's say it was a $40 billion market cap stablecoin. Just absolutely huge, right? Like USDC, I think, is around 50 to 60 billion at this point. The scale of Luna, of Terra Luna, and UST, the stablecoin, was massive. And so when that went pretty much to zero overnight, and when we had the death spiral of UST, I obviously was very kind of concerned for the Cosmos ecosystem, right? A lot of projects lost a lot of money, a lot of liquidity dried up, users completely sort of abandoned the ecosystem. And my vision was, okay, well, how do we like bring more interest and stability and security to Cosmos? And so that's when the idea for Noble, which is basically a purpose-built stablecoin issuance protocol, that's when we kind of decided to kind of work on this. That's when we initially came up with the idea. And then ever since then, we've greatly expanded kind of the mandate and what we're working on, because, of course, the stablecoin space is kind of moving so quickly and there's a lot to be built. Um, but yeah, basically, the origin story of Noble is really closely following the collapse of Terra Luna, which is an interesting way to start a company, kind of in the midst of just so much, bearish sentiment. And of course, after Terra, you had FTX and Celsius and all of these things.
That was quite the time, hey? There were a few things that happened during that time.
Yeah, it was pretty rough.
Yeah. Um, but yeah, do you want to kind of like differentiate Noble then a bit from, for example, Terra Luna? I believe it's like a collateral backed stablecoin, right? It's like a big difference, I guess.
Yeah, so Noble, our first mandate was how do we bring stablecoin liquidity to Cosmos, and we actually first started working with Circle to do that, and that was with native USDC. So obviously, when you're thinking about kind of bringing stablecoin liquidity to directly to various application developers, you have to think about things like routing. You have to think about things like fungibility, security. and obviously like the UX around these stable coins. And so Noble was initially built to kind of solve that, right? We said we want a very minimalistic, very purpose built protocol where the entire purpose of the protocol would be to simply mint, burn, route these stablecoins to various application developers, various app chains in the Cosmos ecosystem. And so we did a very good job with that. We brought, of course, Circle's native USDC to Cosmos. We brought Circle's native bridge, the cross-chain transfer protocol, to Cosmos. And with that experience, we've realized other asset issuers also need this kind of on-chain support to really proliferate their stablecoins. And so, really, up until now, that's been our mandate, right? Issuance and making sure that both issuers, like the asset issuers, like the stablecoin companies, and then also the applications and the app chains would be serviced with this reliable kind of path to stablecoin liquidity. And so Noble as a chain, kind of from an architecture perspective, actually there is no programmability. There's no smart contracts. There's no DeFi. It's very minimalistic and very specific, like in its role. And that's been great. But what we've realized is there is so much to kind of build to really increase the utility of these stable coins, right? And we can talk about that. But to kind of build out those products, you obviously need, you need smart contracts. Again, you need programmability. You need a way to kind of ship those products. And so we recently announced about a couple weeks ago that we're launching an application layer. And this will be an EVM application layer, actually using the Celestia stack. So very, entirely EVM compatible. And the point of this application layer is to really build out a lot of the kind of missing, applications that are needed to keep proliferating the stable coin kind of growth.
Interesting. What are some of these applications? Because like just to play devil's advocate and ask provocatively, like why do we need this another EVM compatible roll up?
Yeah, I mean that's like the entire discussion, right? Like, why do we have so many app chains? Why do we have so many rollups? Why do we have so many layer twos, layer threes? It's a great question. Quite simply for us, again, we got so much traction around the issuance of these stable coins. So in the last year, we did about $8 billion of transaction volume. We currently have about 600 million of TVL of stable coins on Noble. A lot of that is USDC. There's other, of course, assets that we support, like the Euro, Ondo's USDY. Most recently, of course, we launched Noble Dollar, USDN, which we can talk about. And some of the things that were missing were, for example, deep liquidity pools of euros to dollars. It's actually still relatively hard to get access to non-US dollar stablecoins in like a price efficient way on chain. And so, like, this is just one example, right? But we said, well, why are we kind of relying on other dexes or other, let's say, app chains to, generate this liquidity for the euro, for example? We should just build this ourselves in a way that's, again, price efficient, it's fast, there's like, seamless routing, things like this. Again, like, we're not trying to create like a general purpose kind of layer one that's like EVM, compatible, uh, for people just to like, you know, um, build random things. Like it's like very purpose built for, again, like the issuance of these stable coins.
Mm, okay. Can you tell me more about that? Because I know there is some interesting concepts there, right? I think the yield is supposed to be programmable. So what does that mean? How is the stablecoin collateral backed? Can people issue their own stablecoins now and then like program in how the yield is distributed? Like what's the underlying sort of main characteristics of this?
Yeah, so we obviously launched Noble Dollar very recently, USDN. So this is the kind of the newest stable coin that we support, and USDN is very interesting. As an asset, there are a few things that make it unique. So one, like other stablecoins, it is dollar pegged. It is collateralized by treasury bills, short-term treasury bills, so it is very safe. Just like Tether and Circle collateralize their U.S. dollar stablecoins with treasury bills, so does Noble. The difference, of course, is that the yield on Noble Dollar on USDN actually gets passed on to end users, with every block. It's a rebasing token, meaning the value of your USDN just always goes up. There isn't like a separate yield token. We try to build it in a way that's like very intuitive for end users and can actually be something that is like more, let's say, mainstream as a result. So I'm happy to sort of share just kind of a little bit of just our front end that we launched again about 2 months ago for Noble Dollar, because I think it hopefully just um, it hopefully just shows what Noble Dollar is all about. So again, it's a dollar stablecoin, just like you have USDC, USDN, but of course it is safe because it's backed by US Treasury bills. It's actually fully over collateralized, about 103%. And to be clear, we work with a partner to actually like mint Noble Dollar and distribute Noble Dollar. That's the M0 team. But it's really important for us that it is like safe and that it is, of course, over collateralized, because you want to make sure that things like redemptions and again, like the actual like safety of this asset is like set to a very high bar. So yeah, in the past 2 months, we mentioned about 82 million. Of course, you could see kind of the yield that is getting paid out. You could see how many people are holding Noble Dollar. And yeah, there's just like a lot more kind of information about, again, like what the kind of guarantees around are behind the collateral is, whether it's, kind of where the assets are being custodied and things like this. So another kind of piece that I like to always bring up actually is this calculator that we kind of built to really just show, like, obviously stablecoins and these like US dollar stablecoins are really meaningful for people and very powerful because they can be a hedge against currency devaluation or inflation and things like this. So I mean, we have a team member who's kind of based in Nigeria. For example, he's based in Lagos, and like, just like compared to the Naira, like it's just really significant, right? If you kind of hold, let's say, $1,000 in, in USDN versus like your local currency. I mean, you can just see obviously like the relative currency devaluation. Um, Anyways, I mean, this is like a very like big difference, but again, you can see that a lot of folks have just been very interested and excited by Noble Dollar because of the yield component, but also its safety and the fact that it is, again, very similar in nature to a USDC or a Tether.
Okay, this is interesting because I mean, USDC doesn't pay out the treasury yield to holders, or?
No, it doesn't. So, I mean, you do have obviously like products like distribution partners like Coinbase or maybe others that do pay out the yield on the USDC, but at its core, no, that yield is not paid out. You kind of have to rely on exchanges or DeFi applications to kind of get that yield on your USDC, but at its core, it's not a yield bearing stablecoin.
Right. Which makes it quite an amazing business, right? Like if you look at Tether, I mean, I think they have a tiny proportion of employees compared to Goldman Sachs, and I think they make more profit than them because it's like a amazing scalable business. You're just like holding the collateral, you're issuing the stable coin on chain, but you keep all the yield you're earning on the treasuries that you're holding. So it is quite amazing. But if we if we look at what you guys are doing, you're actually distributing the yield. I feel like in a way, because there's a margin to be had here, and companies like Tether are having them, there's an incentive for companies to come in and sort of compete that margin away in a way. um, so I'm just wondering if do you think the market will move into the direction of like holders of stable coins also expecting to get some of that yield?
I mean, I definitely think it's something that like more and more people are talking about just because as you've seen, as I said, the stablecoin market grows so significantly in like 5 years and it'll just continue to grow even more over the next 5 years. People are like asking more and more like about this question. I think for us, what we're really interested in is the application builders and how do they actually get upside. So like let's say build a very successful DeFi application and you end up, getting a bunch of volume in stablecoin, stablecoin volume and you're kind of growing. If you're using obviously a stablecoin that does not pay you the treasury bill rate or the yield, you actually don't see any of that upside. That is obviously kept by, the centralized kind of stablecoin issuers for themselves. And what we want to do with USDN is actually also give that as a tool or as a leverage for other projects to be able to tap into some of that yield. So one of the things that we like to say is, USDN is composable yield, right? So like obviously on Noble, we pass on all of the yield to the end users. Um, but for example, if you're a application developer, let's say you are building a perps dex, and obviously you're using stable coins as collateral, US dollars as collateral on your perps dex. You can actually decide, how much of that yield do I want to pass on to traders, maybe keep as revenue, maybe do a buy and burn of my native token. So all of a sudden, you get this like really interesting flywheel, right? So in this case, USDN is used by applications as stablecoin liquidity. The yield goes to the app developers. They decide, okay, we're going to distribute the yield in such and such way. That theoretically should improve the economics of the application. You get more utility from the app. You attract more users and more liquidity. And, the kind of flywheel keeps going. And I think that a lot of people still maybe don't understand how powerful this is because they're so used to, relying on a stable coin that, again, is safe and, again, backed by treasury bills and, there's like audits and it's regulated, but it does not pay you that yield.
Mm. Yeah, yeah, I think that is quite powerful. But like, okay, you said it increases in value. Like that's how the yield is distributed. Um, how what does that mean exactly? Like, do you have like a specific token pool against which you can trade then at a higher price? Like, where is that? How is it enforced that this value is increasing of the stablecoin?
So literally, when USDN is minted and somebody holds that USDN, there is a entity somewhere in the world that buys a treasury bill to collateralize that dollar with, and the yield, of course, comes from the treasury bill, whatever that rate might be at any given time. They're all short-term treasury bills, so between 30 to 90 days of maturation. Um, and again, that's all like audited on chain. It's all verified, through audits that actually happen every 24 hours. That yes, there are this many treasury bills collateralizing the coin at any given time.
Mm. And then you can burn it. Is that what you? That's how you realize the higher value. You can then burn it after 90 days, and you get back more US dollars. Then
No, so the yield gets paid out with every block. So again, like there are treasury bills that are held in a bank account that accrue yield, and that gets passed on to holders. You can obviously swap if you want to like exit to fiat. You can swap that to USDC. Obviously, or even Tether, and kind of withdraw that to your bank account. But no, like as a user, like you buy the stable coin, you have it in your wallet and the yield gets paid out every every with every block, and you just see that principal grow over time.
Okay, so the amount grows.
Yeah, it's a rebasing token.
All right. I thought just like the amount stays the same, but you can trade it or burn it at a higher value then. But okay, this makes sense then. If the amount increases, that's pretty straightforward. So this app layer, it will be built like around sort of your stablecoin being the fuel on there, or is it like other stable coins will be launched on your chain? What's sort of what you foresee?
I mean, we're continuing to obviously, support the existing issuers that we already have. So on the app layer, Noble Dollar will be a big part of it. But of course, there'll be, pools of liquidity for the euro, for the dollar, other tokenized kind of products. Yeah.
Gotcha. And who do we trust in the construct? Because every time you kind of like connect the real world to the on-chain world, there's sort of trust assumptions that you have to take on, and there's a bit of trade-offs, right? So, for example, who holds the treasuries? What's their incentive to do so? I mean, I'm sure they don't do it for free. Who buys the token then with the treasury yield? That sort of thing.
Yeah. So, I mean, you're trusting the issuer to be obviously managing the kind of custody of those of the collateral that's collateralizing these stable coins. In the case of Noble Dollar, so as I mentioned, we work with N0, which is which is the stack that we use to kind of mint and of course distribute USDN. And in this case, they work with a network of what they're called special purpose vehicles, SPVs, and those SPVs, of course, custody the collateral, the T bills, and I mean they're all like regulated, financial institutions, if like banks, for example, and that's all again verified, kind of on chain as well. So you actually have a network of validators that actually attest to that collateral. I believe once every 24 hours. So they actually like put on, like a verification on chain that says yes, USDN is collateralized. In fact, it's over collateralized by mostly treasury bills and a very small amount of cash deposits. And that's all, again, verified on chain. The, of course, incentive for these, what they're called minters, is a very small fee, a take rate on the T bill rate. Um, but that is, I think a very worthwhile kind of exchange to have a permissionless yield bearing stablecoin obviously take root.
Right. And I kind of mentioned Stripe earlier. So obviously, huge payments company, and they seem to be really embracing stablecoins. They bought Bridge for over $1 billion, I believe.
Yeah.
Big acquisition, which is a stablecoin orchestration network. And I think just like this week, Stripe announced stablecoin financial accounts, where you can hold a stablecoin balance, and send and receive funds with fiat, so USD, or through crypto rails USDC, sort of like a joint balance type thing. I don't know what's underneath it all, but it sounds convenient. And I think just today, earlier, I saw Patrick Collison, the Stripe co-founder, posted that they're partnering with Ramp to launch stablecoin backed cards, first in Latin America, I think. So there's a lot happening there. How do you view this? Is this a positive for Noble and what you guys are doing, or a negative? Is it competition, or is it like a catalyst for the whole thing?
It's definitely a catalyst. I mean, we definitely take the approach that rising tides lift all boats. Especially what Bridge is kind of working on now that they've been acquired by Stripe. It just makes it a lot easier for people to on ramp into stablecoins. I mean, that's fundamentally what they're trying to achieve. Um, and I mean, that's also what we're trying to achieve, right? Like having these rails to again, like the fiat world, having again, like simplicity, kind of from a um, routing perspective. So yeah, it's definitely a positive.
Okay. Okay, that's good to hear. Yeah, I think in general, yeah, I like the saying you just used. The tide lifts all boats, and there seems to be sometimes in crypto a bit like camps versus camps, but in the end, the market is still quite small, and we should just like look to grow it all, right?
Exactly. And I mean, to get to these numbers that I mentioned earlier, right? Like, what in 5 years, like a $1 trillion market cap. I mean, that's like 4x at this point, which is totally doable, and maybe even more. You really do need, again, like a lot of these things to be a reality, whether it's something like a bridge product, whether it's something like a Visa taking a more a more intentional bet on stable coins. Actually, their last earnings call, so about a couple weeks ago, they mentioned stable coins in their earnings call for the first time ever. It's something that's very good for the space, in my opinion.
Mm,
Yeah.
okay. So yeah, you've worked on this for a long time in this sort of realm, stablecoins, and just wondering what's some of the difficulties related to stable value on chain. I mean, there's controversies, there's things that went clearly badly, like Terra Luna. There's controversies around like transparency of some of the stable coins. Often Tether is talked about in that context. Like, what are some of the difficulties in terms of stable value on chain, tokenization, um, and what has been the regulatory sort of side of it?
There's a lot of very positive regulatory developments actually, on the stablecoin side. So right now there is a uh, piece of legislation called the Genius Act that's been being drafted and kind of debated on in Congress. So this is like U.S. Legislation that, if passed, I mean it hasn't passed yet. Like we'll see what happens. It would just give a lot more clarity to stablecoin issuers, which is great. Um, and basically, you have like all like other countries or jurisdictions kind of becoming a lot more aggressive and intentional around their stablecoin strategy, because on the one hand, like the US kind of taking the lead is kind of like legitimating this technology, and it's saying, okay, stablecoins are here to stay. But on the other hand, countries around the world, they understand that if they don't take action and have good uh, policy around stable coins, then maybe their own kind of markets will be saturated with US dollars even more than they might already be. So I was in Korea recently, and like the Koreans are looking at like a Korean won stablecoin strategy, which would kind of protect the won on some level, and then on another level would just really protect consumers and kind of ensure that people know what a safe stablecoin looks like. So yeah, I mean, there's just a lot of regulatory clarity. Um, it's going to definitely be great to watch things unfold.
How's the euro doing on this? I think so far I haven't seen any meaningful euro stablecoin adoption. I know they love to regulate, or we do. I mean, I live in Germany, so yeah. How is the euro doing?
Yeah, actually, the Europeans were early to stablecoin legislation on Mika. The euro stablecoin market is still small, very like quite small, but it's growing. Um, I don't have an exact number off the top of my head. I want to say it's around $1 billion market cap. Could be a little bit less, could be a little bit more. You have obviously Circle that launched Euro C, the Euro coin. You have Monerium, which is an issuer of the Euro stablecoin that we work with, actually, and they have quite a decent amount of market share. They're integrated into Gnosis Pay, which is a well-known payments app, and other applications. So yeah, I mean, it's growing. I think again, it kind of goes down to the fact that there's very little liquidity for the euro right now on chain, and so again, pricing, routing, swaps, like all of these things are just not well developed right now.
Mm. You've been around for a while in crypto. What's the thing you're least bullish on?
Least bullish on? Probably honestly the meme coin stuff. I know it's like found product market fit, but I think it's not going to be sustainable over a long enough period of time.
Yeah. So that's not something you dabble in, or you.
No, I actually have I actually have bought meme coins historically, but just to kind of test out some of these apps, but also to speculate. And I just think it's not sustainable. I think eventually it's like how back in the day, people, used to like post funny cat videos or like on early days of YouTube or whatever, and then people would like it was part of the culture. I think like cultures change over time that eventually I don't think meme coins will be the thing that drives crypto adoption.
Yeah, it could be. It's a fad in a way, but in the same time, they'll probably still be gambling in some fashion, right?
Oh, yes, there'll always be gambling, but I just don't know if it'll be in the form of meme coins.
Yeah, NFTs had their day, and then volume dried up. That was also a similar thing, wasn't it?
Yes, exactly. I mean, you still have NFTs and you still have meme coins. I just don't think it'll be as huge as it is now.
Yeah, yeah. So what's kind of coming up next for you guys that you're excited about in the near future?
Yeah, so we're launching this app layer, as I mentioned, which is this EVM. Basically, it's an EVM sovereign rollup on Celestia. On this app layer, we're looking at a September launch approximately. On this app layer, we're excited to kind of bring some kind of new, interesting, kind of stablecoin centric applications, things like payments, things like lending, deeper kind of pools of liquidity for swapping, again, between these like different assets that we support. Of course, we're continuing to do a points campaign around the Noble Dollar, just to get people kind of excited around USDN and just being aware of like what we're doing, which is really exciting. And so those two things are really important for us. And I mean, for folks, like feel free to follow me on X. I also follow Noble on X. I'm Jelena underscore Noble. The Noble handles Noble underscore XYZ. But yeah, there's quite a lot on like happening there.
Okay, cool. We'll put those links in the show notes. Any other way to stay up to date, or is it best to just follow you guys on X?
X is the best.
Okay, that's a good slogan. Okay, cool. I mean, that was really interesting. Anything else you'd like to share?
No, this is all great. Again, like for stable coins, we also do like a lot of writing on stable coins. So you can check out our website,
Mm,
noble.xyz/blog. And yeah, stay tuned on more things coming from Noble.
yeah, I like the transparency of it. I like the website, the way you laid it out, all quite transparently. I think that's important in that space. Also sends a signal to kind of separate yourself from the kind of bad developments we've had in the past with stablecoins. Get some trust from Web 2, from institutional players, right? Because I mean, sure, you can do all the audits and do the tech nicely, but you still need to meet a lot of decision makers on a level like in Germany you say the eye eats as well. Like
Yeah,
so
yeah, no, I understand. Yeah,
yeah. So I think if you present USDN that way, I think it goes a long way. And yeah, all the best for that.
thank you so much. Yeah, it was nice chatting with you. I appreciate it.